Welcome back to the latest episode of my 11K margin trading on Interactive Brokers challenge, where I'm trying to grow an 11 grand account as quick as I can. If you're brand new, you'll probably see I'm not doing the best of jobs at the moment, where I'm currently down $75 in around 8 weeks. This is primarily down to me getting margin called on two meta covered calls at $600, which, I was a bit over leveraged at that point. So, my broker, Interactive Brokers, liquidated my positions. And again, I'll link to that episode down below as well as the full playlist if you want to know what's been happening right from the beginning. But I've always had this one contract on Meta where I've been selling covered calls against it, and I've been rolling it every single week for a net credit premium. So in this episode, what we're going to do, we're going to go through the latest trade. We're going to have a look at the meta charts to see why I've picked these particular strikes and all that kind of good stuff. So make sure you like, subscribe, and comment down below if you've got any questions. So what we talked about last week was about rolling the position up and out. And what I mean by that is Meta was going up really, really quickly, really, really fast. And therefore, my covered call, my $172.50 was in the money. So, i.e., Meta was trading above 172.50. And you can see here at the highs of that particular week, it traded as high as $183. Now, what we talked about in that video is rolling the position up, i.e. moving my strike up. So I moved the strike from 172.50 to 175 and rolled my position out, which basically meant rolled it out in expiration. I rolled it out for 1 week to get a whopping $5 net credit, but it served the purpose. And if we look at what happened in this particular week, you can see that Meta came crashing all the way back down to lows of $170 there thereabouts. 167.08 actually was the actual low. So you can see his hand from a trading perspective. This is exactly what I wanted to see. And what I did was I should have waited, but around this level over here, so around the 170, 172 mark or 175 mark, what I managed to do was buy back the 175 call for $184 and sell to open the 180 call at 222. So therefore that gave me a net credit for the week of $38. Same principle as the week before. I'm rolling up or rolling out in expiration, so from 175 to 180, and rolling out in time for 1 week later to this Friday, August the 26th. So if I left my position and didn't do anything, so I had the 175 call. As you can see, the price closed at 167. So this option would have expired worthless and I would have been out of this kind of trade. However, I would have rolled this anyway, but I would have made more money than $38. If I waited till the Thursday or the Friday, I would have probably closed this out for $5 to $10 as opposed to 184. But now I'm fairly confident now. I think this option is deteriorated in value a little bit. 180 is is at this line here, as this obviously shows, is at this level now. So I've got quite a big cushion, and it's the pre-market's 165. So I've got a $15 cushion this week before we kind of get to this level over here, which again, I think this will help me now. I should be able to roll this out in maybe even Monday, Tuesday this week, actually, for a pretty cheap price to pick up, and then probably roll down to the 175, 178 mark, hopefully for $100 credit, and start picking up that $100 a week. So therefore, I should be in a place, all else being equal, showing you guys a positive number for next week. And I just want to share the screenshot of the trade of last week's trade. So I bought back the 175 call for $184, and then I sold to open the Meta 180 call for $222, and therefore that's how we get our net credit of $38. And again, when you place this trade, whether you're using Webull, Moomoo, Robinhood, or Interactive Brokers, it does these trades at the same time. So you set the trade up that I want to buy back this for this price, I want to sell this for this price, and then it basically says what net credit would you be happy with. And then you submit your order, and then it will fill both orders at the same time, which you can see from the timestamp. You can sell both trades happened at the exact same time. So you've not bought it back, and now you're waiting for 20 minutes for your sell to open to happen. And that's the benefit of the rolling feature in most option trading platforms that are there. So that I'm fairly happy with that. Around $524 up on this particular one. Obviously, we got this two losing trades, and therefore we're down $75. So I plan to be positive for next week. Now, just where I think what's going to happen to Meta, I think in the front end of the week, I think we're going to be a bit more bearish, and the bit I'm really watching out for is this missed weekly pivot. So I've not calculated where the weekly pivot is. I think the weekly pivot probably be here somewhere if I had to guess. I've not calculated it, but I would imagine, and if you look at the pre-market at 165.34, it's looking to open pretty much at this pivot level. So this is what's called a missed pivot level. And what that basically means is this weekly pivot was made in this week, and price didn't hit that pivot level in the week that it was created. So most of the time, so you've got a missed pivot level over here. It took 1, 2, 3, 4, 5, 6 weeks for that pivot level to get hit. So most of the time, as you can see, pivot levels get hit, and you got another missed pivot over here, which happened in the second 1 week later. So you got 6 weeks till this was hit, 1 week till this was hit, and at the moment you've had this has been there for 1 week. So I think 2 weeks will get priced at this level. So I like trading pivot levels. I like looking at where pivot levels are, and especially when I've got something at 180 and price potentially going to be opening in the next half an hour or so around this pivot level. That again will depreciate the 180 option that I've got already, which will make that buyback so much more cheaper and my sell to open to be a lot higher to then generate more and more premium. So I'm probably going to do a dedicated video on this probably at some point this week. It's so important to understand if you trade options, you have to learn how to roll and select strike prices. Probably the number one most important thing I've learned over the last 2 years is rolling options and selecting strike prices, because if you don't understand those two fundamental pieces, you're never going to make it as an options trader. So if you want to see that video, comment down below, and I will look to make that. I've got a few ideas on how to make it a bit more interesting with a live example. That's where my kind of head's at the moment. I've not created it yet, but if you want to see it, comment down below. Make sure you like and subscribe, and make sure that you check out the playlist for this full thing, which should be on the screen now. And I shall see you guys in the next video.